Hello, this is Melissa Joy, and I'm so pleased to be joined by Melissa Fradenburg. Hi, Melissa.
Hi, everyone.
And today we are pleased to be talking about Social Security decisions for your retirement success. I'm going to go ahead and dive right in. Let me share the screen so we can go ahead and go. Melissa, give me the thumbs up. It's going to take just a second. You can see the screen?
Almost. There we go.
Okay, cool. Good. Well, welcome. Melissa and I are both financial advisors, financial planners at Pearl Planning. My office is in Dexter, Michigan, and Melissa joins us from Grosse Pointe, Michigan. And before we get started, I hope that you have some questions for us, and save those questions and just shoot me an email at melissa@pearlplan.com, and we will make sure to respond to your questions at the end of the presentation. And we'll have a time to remind you, hey, what do you want to ask? And this presentation is for any of you who are nearing retirement, things are starting to feel real, or if you would just want to understand more about your retirement future, but you're a little ways away, that's okay too. And if you have choices to make for your Social Security decisions to keep you informed, I think that this will be very topical. And then also, when you kind of look through to see what your retirement will look like, this will be right for you. So with that, I will hand things off to Melissa to get us started.
Great. Thank you, Melissa. So today we're going to cover basically understanding the basics of Social Security, how you find your specific Social Security information. We'll go through some strategies that can increase your Social Security income over time. We will also talk about how to evaluate the Social Security claiming decisions that you have available to you and how to create a comprehensive retirement plan around that. Also worth mentioning that if you've signed up through our webinar, we have your email address, and as a follow-up, we're going to send you a Social Security decision flowchart guide so you can help determine what options work best for you. If you're watching a replay, we're going to try and link our blog that will have these available to you. You can also email us at melissa@pearlplan.com and we will send you a copy as well. So I'm not sure if this sounds familiar to you, but I know Melissa and I meeting with clients, almost anybody nearing retirement, they sit down with us for the first time and they know that they have some money saved for retirement, but they're not sure exactly how much. Maybe they have accounts in various places. And they're concerned about the trade-offs when it comes to claiming Social Security. What happens if they claim too early, or what if they claim later and they're not getting as much Social Security income as they could? And then they have investments that are managed, but they're not really in coordination with other retirement decisions, such as Social Security and maybe pension income as well. So if this is you, you're in the right place, and hopefully this webinar can help you. And when it comes to collecting these benefits, it's an important decision because it does have lifetime consequences. Once you make that decision on when to claim Social Security, really you're stuck with that decision. And Social Security, like a lot of government programs, is complex and it evolves. There are changes that are made. So it's important to be informed. And that's really the best that we can do, is inform you on the options that you have so that you can make a prudent decision. When it comes to retirement income sources, the majority, on average, people rely on Social Security for 33% of their retirement income, with 34% coming from earnings, 20% from pensions, and the rest coming from savings and investments. When we look at the advantages of Social Security income, one is that it's lifetime income, and yet that gives you some longevity insurance. It's government backed. It's adjusted annually for inflation. And it does have favorable tax treatment. It provides, in some cases, a survivor benefits and a steady stream of monthly income. Now, a lot of times you'll hear people talking about Social Security solvency, and that is something that people often bring up when they're talking about whether they should claim it early or wait until full retirement age. So just to let you know, Social Security, the old age and survivor insurance benefits are projected to meet funding through 2034. And after 2034, payroll taxes are projected to pay about 79% of those benefits through 2089. In addition, reform is likely. It's definitely a hot topic. So fears of your Social Security benefits being reduced really should not influence your claiming decision, especially if you're on this webinar today and you're nearing retirement. Most likely you will be good for Social Security income. So that really isn't a key in your decision on when to claim it. Now, you'll see it on the right here, this form you've probably gotten in the past. Maybe you breezed over it, put it in a drawer somewhere and can't locate it right now. If you don't have this that gives you your estimated Social Security benefits and you're wondering what you could expect, you can go to the Social Security website and, one second, I'm having trouble. I actually have something covering my screen that shows the address which to go to. So
ssa.gov/myaccount.
Perfect. Thank you. Yes, I have this great little toolbar on the bottom here on my webinar. But yeah, if you log in and create an account, if you haven't already, and it will show you the same information that you get on that statement that comes in the mail and give you an idea of what you could expect based on when you claim your Social Security income. And I'm going to pass it back to Melissa, and she's going to go a little bit more in depth on how that is determined.
So you can get that Social Security estimate, which, like we said, you used to receive it in the mail either every year or every 5 years. And nowadays that does not come out to you automatically, but it is a document that we love to have because it gives us information about your projections for Social Security. And one of the most important terms that you need to know is PIA, your primary insurance amount. This is an amount that used to be how much you would be eligible for Social Security at your full retirement age. And full retirement age is kind of a moving target. That's one of those reforms or adjustments that is hoping to stretch out the solvency of Social Security. If you were born between 1943 and 1954, age 66 was your full retirement age. And then we had a stair step where there were 2 months added to your FRA or full retirement age for every year leading up to 1960. And at this point, for those born in 1960, your full retirement age is going to be age 67. Now, we start with that number because all of the calculations about your claiming decision are based on that full retirement age number. And what Social Security does is it determines what are your best 35 highest earning years and comes up with a calculation for the amount that you are eligible to receive. And the biggest primary insurance amount for the year 2021 is $3,113 per month. If you're 62 years old, the most, if you were eligible at full retirement age for that $3,100 is $2,324 less. And if you go to your maximum age 70, you could get up to $3,895. So let's dig in a little bit more to the decision matrix. So basically, when you are deciding what age you are going to be claiming Social Security, you are determining the amount that you're receiving, or in essence, you get paid to wait. And you get paid quite a bit to wait. You can get 6, 7, 8% a year for the delay in a claiming decision. And moving from age 66 on, if you go to the latest age that you're able to get bumped up or paid more for waiting, at age 70, you get 8% a year. Now, that sounds like, maybe it sounds like a little, maybe it sounds like a lot. You're definitely thinking, well, how am I going to cover my income needs if I decided I wanted to retire at 62 or 65? Certainly, there are some trade-offs to deciding to claim later. But interestingly, we have an interest rate environment that is extraordinarily low. So an 8% kind of yield or return on waiting is a big deal given the super low interest rate environment that we have. So just looking at that earnings statement so that you can reference where you're going to find the right information. Looking at your full retirement age is the first line mentioned with a dollar amount. That is that age 67 if born in 1960 or later. And then Social Security will also calculate for you and give you the information about what you get if you wait and what you get if you decide to claim a little bit earlier. This, of course, for most of us, we're not like knocking on the door of full retirement age when we pull off this report. So it's important for you to know that the Social Security Administration will assume that you're pretty much making the same amount or reporting the same earnings that you have been in the past. So there may be a slight adjustment if you decide to retire at 60 and are kind of pulling off your Social Security statement report then. Well, they've estimated that you're going to continue to make the same amounts till age 67, but it's a minor adjustment, and it's something that, if necessary, we can go through all the numbers to get a much more specific estimate based on what your plans are. So there is a huge difference between what you receive in Social Security, a 76% increase between someone age 62 and someone age 70 if their full retirement age was age 66. So it can make a big difference in terms of the amounts, but of course, then you are also trading off with how quickly you're able to start receiving money. And not everybody has the luxury to wait. We're really kind of referencing those of you who do. Hot in the news in the last couple of weeks is that there's a cost of living adjustment coming for Social Security of 1.3% that will be enacted into next year. So the 2020 COLA, or cost of living adjustment increase, is 1.3%. This is meant to keep up with inflation. Depending on your perspective, you could say, well, that's quite generous because many pensions, which Social Security is similar to, do not have cost of living adjustments. But the inflation calculation and adjustment amount is not quite as much as the consumer price index. So it's a little bit muted. And again, that's a way to kind of keep the Social Security fund from running out. But there is that adjustment that goes on every year. And the cost of living adjustment has been all over the place over the time. In 2009 and 2010, right after the financial crisis, there was zero cost of living adjustment. And again, that occurred in 2015. Because as you probably know, we've been in a pretty low inflation environment for most of the last 20 years. And you can see that in these numbers in the middle and right column. But if you went back to the 1970s and early 1980s, where there was significant inflation, those cost of living adjustments could have been quite significant at the time. Certainly relevant. And it depends on what types of services that you need in retirement, what you're spending money on, as to whether you can kind of keep pace. Certain items have been deflationary, but of course we know that healthcare costs grow up quite significantly over time. So, don't expect a solid 2.5, or 3% adjustment. It just depends on the year. Another important consideration for Social Security is the taxation of benefits. So your Social Security taxes are not taxed exactly the same way as your regular ordinary income. And typically the number we remember is that up to 85% of benefits can be taxed. But there's actually, for some people who do not have other income and are making amounts less than $25,000 if single or $32,000 if married, you may not have taxes at all on your Social Security benefits. We account for this and plan for this by making sure we tag your Social Security income in our financial planning software so that we have the right tax rates calculated. And those taxes are really going to matter to you as you start to think about retiring over time, having sustainable money. And I know taxes are on people's mind as we approach the election as well. So I think it's helpful for you to understand what to expect to pay. It may be different from year to year. Perhaps you're in a couple who one of you is claiming Social Security and the other is waiting. So there may be some years where you would have less taxes and then it may switch to more, or as you get to those years with your required minimum distributions. There are some ways that you may not be eligible for Social Security, or you may be eligible for less Social Security. One of them is the government pension offset, which means that if you are eligible for a government pension, you are likely to have a reduced Social Security benefit. And this may affect spousal and survivor benefits as well. And the other type of pension that may reduce your Social Security eligibility is the windfall elimination period. I know about this personally because my mom was a teacher in Texas, and in Texas, they don't collect Social Security income. She does have an earnings record for Social Security, but because she's eligible for a pension and was employed through the state of Texas, she's basically has negligible or is not receiving Social Security. So this is certainly relevant, and you need to make sure that you are, in fact, do qualify for Social Security. We have some information so you can go through that list, and typically you would know and understand this. Fortunately, in the state of Michigan, if you're a teacher or a government employee, you still are eligible for your full Social Security benefit. So the thing that we do as financial planners after we know your Social Security benefit, after you bring us your statement and say, here's my earnings history and here's my primary insurance amount, is we evaluate your break even for delaying claiming. Sometimes people come to us and they've already made up their mind. You know, my last day of work is age 62. I'm going to claim Social Security right at the same time. Now I need a financial planner. Our preference would be that you involve us in that discussion of, hey, what's the best last day of work? Here's how we're going to spend money in our early, mid, and long-term years of retirement. Your game plan may be right on. We're not there to tell you no, but we are there to consult with you to make decisions about whether claiming may make sense earlier or later. In this example, you have somebody who is eligible for Social Security at age 66 and would be receiving a flat, easy to calculate $2,000 a month. If they decided to claim early at age 62, they would get $18,000 a year. And if they waited till age 70, they would receive $31,680. Now, in the early years, this is kind of a tortoise and a hare race. The hare, age 62, is going to be ahead. So they are collecting money right off the bat. And until age 75, they would be better off than someone who is claiming at 66 or someone who is claiming at 70. Then the tides turn, and at age 75, you're better off if you had claimed at age 66. And at around age 80, you're better off if you had waited till age 70. And, you know, your personal circumstances, where you're going to be drawing other money, all of those factor in as well. So it's not quite as tidy as this looks. In many cases, it's a little more complex. That's why we like to get involved. But it's important for you to know that in earlier years of retirement, or if you just know your health is poor, you know, you don't have a long life expectancy, well, early claiming may be absolutely the most appropriate. But Social Security is something where I like to tell you, you're buying the best longevity insurance, or at least the cheapest that you can buy, with waiting those extra years. And in reality, we're focused on the earliest age, the full retirement age, and age 70, the latest age. But every single month that you wait to claim is a little bit of a nudge up in terms of your benefits. So it's not like you only have 3 choices. You could claim Social Security at age 69 and 9 months, and you would get most of that step up and just have a little kind of hanging over. So the longevity consideration does matter, because sometimes I talk to people and they're like, you don't have to worry about me. I'm not going to live until my 90s. But the reality is that people's life expectancies continue to increase in the US. If you've lived to age 65, in 2016, your average life expectancy for a woman is more than 85 years old, and for a man, 83 years old. That's expected to be by the year 2090 up to 90 on average, and 87 for men. And if you're in a couple, if you're with a partner, then the odds that one of you live till age 90 or 95 is about 50-50 for age 90, and 20% of couples will have at least one spouse that lives to age 95. in our own financial planning calculations, we like to assume right off the bat that both of you live till age 95. And so that, would tip the scales to saying, let's consider making sure that we have enough money in the later years of retirement. Now, I want to get into some other, a little more complex considerations. In some cases, married couples have one spouse who has an earnings record and one who doesn't. And in that case, oftentimes, there are some additional considerations like windfall elimination period, but oftentimes the spouse would be eligible to receive 1/2 of the benefits of her or his spouse. So a higher earner, once they start collecting benefits, allows the spouse, if they're at least age 62, to also begin to collect benefits. And again, there is a difference between collecting benefits on spousal benefits at age 62 versus the full retirement age. You don't get that step up after age 70 for those monthly increases oftentimes. So we have calculators that can look at claiming for a married couple. You do need to be married for at least 1 year to be eligible for this, which is something to consider for gray marriages or marriages of people in later years. Also, if you are divorced, then you were married for a 10-year period and have not remarried, then you may be eligible for Social Security based on the earnings record of your divorced spouse. If you have your own earnings record, oftentimes, it would be more relevant to claim your own, because this is like a spousal benefit where it is not as it's not as big as a full retirement benefit. You have to be divorced for at least 2 years, so you can't turn around and claim on your divorced spousal benefits right post-divorce, and you need to be at least age 62. You don't have to ask permission from your ex-spouse. This is something that you receive automatically if you apply for it, so it's not something also that dings them. And interestingly too, you're eligible for widow's benefits or to have the step up to the ex-spouse's income if they're widowed, just like survivor benefits for a married couple. So if you've been married for at least 9 months and you're at least 60 years old and not disabled or caring for a child, then you would be eligible for a survivor benefit. There are claiming decisions that fit in with that. And there's also considerations if you are working and have an income, depending on your age. But this is also for those who are widowed. There are certain Social Security retirement benefits that are available, different than disability benefits or benefits for younger widows with minor children. So things that you should make sure that you consider are when do you think you plan to stop working? Not everyone has a choice. I mean, we're living through a pandemic right now, so sometimes the best laid plans get interrupted by life. So not only when do you plan to stop working, but what if you had to stop working at a different time? What will your earnings look like in retirement or until retirement? So that helps you to forecast what your Social Security eligibility is, as well as retirement savings. Thinking about longevity, how is your health? What is your family's history of longevity? And oftentimes when people say, oh, I'm going to be fine, I'm going to die at age 75. Well, the retirement planning is pretty easy on that anyway, because that's less of a burden on your money versus, I love to make sure that we've thought about living a long time. There are considerations for married couples with spouses in terms of, who's left, what's left. Sometimes the Social Security decision for the higher earning spouse is really a decision for both members of the couple. And then one of the really important things is that you need to integrate your Social Security decision with your overall financial and retirement picture. So don't just assume that this is a decision off by itself on an island. When we make the most informed, help our clients make their most informed decisions, then we're integrating their overall retirement plans and assets with their Social Security decision. And we even map out, here's where the money's coming from in year 1, here's how it's changing in year 3, etc. There are other tax considerations. So Medicare comes into play, IRMA, or the extra premium you may have to pay in Medicare, depending on your income. There may be conversion strategies. There's a lot of fun, complex strategies that may be relevant to help you have a better financial picture. But it's often best that you integrate your Social Security decision with your overall retirement plan. And we really encourage people to not just have a retirement idea, but a true retirement plan where they know how much they can spend, not just in the first years of retirement, but also over time. So with that, I'll hand it back to you, Melissa.
Great. Yeah, so the next steps, what do we do now? That was a lot of great information, super helpful, and just listening just reminded me of a lot of the questions that I get from clients when it comes to Social Security. So what should you do if you're listening now and you're still a little bit unsure? First step would be to go to that Social Security website, ssa.gov/my account, and sign up for your account or check your benefits information. And next, contact us for a complimentary phone call to receive a Social Security report. Again, based on your information, since there are, everybody's different and everybody has different circumstances that would change what that may be the ideal time to take that benefit. And then the last step of that, which is part of what we help you do, is to integrate your Social Security claiming decision with your overall retirement plan. So including your investment withdrawal strategy, whether you're going to take that before you claim Social Security, if you can wait and do that. So certainly, if you're on this webinar and you feel like you want to reach out to us and talk more about your specific situation, on the next screen is our contact information. And I am located in the Grosse Pointe office and Melissa's in the Dexter office, but we have clients all over the country. So feel free to reach out to us. We offer Zoom meetings as well as local meetings if you are near one of our offices. And again, in order to get your free gift, which is your flow chart for Social Security, please email Melissa's a little easier without the last name, melissa@pearlplan.com, if you haven't figured out that we both have the same first name by now. And speaking of which, do we have any questions that came through, Melissa?
Not so far. But I guess I would just mention, so just a reminder, melissa@pearlplan.com if you want your specific question answered, and don't hesitate to reach out to us if there are additional questions that you think of after the conversation. But one thing I would mention is sometimes if you have saved what I call taxable assets, so in an investment account that's not a retirement account or just cash reserves, and you have a couple years in retirement, there's some really relevant fun helpful to your bottom line strategies in terms of potentially having some low income years where you're able to convert Roth assets if you delay your Social Security decision. The other thing I would mention is it's helpful to check your record and make sure. I have one client that I'm working on right now, and I looked at their Social Security record and there's a 0 for one of the years that I know they've been working. And so if that comes up, then we would contact the Social Security Administration and say, hey, you missed, can you check my taxes? Because I was working that year and I had income. So that's certainly relevant as well. And we do have contacts with a public affairs officer at Social Security Administration. So sometimes when I run into more complicated situations for clients, then I will reach out to her to get kind of a concierge level service to get the appropriate and correct answers. Anything else you would mention, Melissa? I'm checking my email one more time.
Yeah. No, I feel like you covered a lot of the common questions. I think one of the things that people, especially divorcee clients, not realizing that their ex-spouse is not going to know or be dinged in their benefits if they're using their benefits to claim. That's one of the biggest misconceptions that I've come across in the last few years of doing this. So,
yeah, it's always helpful, even if you're getting divorced years before your eligibility for Social Security claiming, to see if in the information exchange that you have, if you can share Social Security benefit statements so that you have a little bit of a peek of information, because just like you're not, there's no report back to the ex-spouse when you're eligible for their spousal benefit or a divorced spouse benefit. you also can't go to the Social Security Administration and say, hey, I just like the Social Security report for my ex-spouse. So it's kind of a guessing game as to what your benefit is going to be. The good thing is that you will receive whichever is greater of your own earnings record or that of the spouses. So that is the obligation of the Social Security Administration. So since we don't have any more questions, I would just mention, Melissa, thanks for sharing the stage with me and talking about this important decision that most Americans have to make at some point in their lives. We try to keep lots of information out there for you. So if you enjoyed this presentation and would like to be invited to future educational webinars, please join our mailing list. If you visit our website at pearlplan.com, you can sign up for our newsletter, check out our blogs where we include replays like this. They're also available on our YouTube channel. And we'd also encourage you to check out our podcast where we are always talking about relevant topics.
Yes, and that is 52 Pearls Weekly Money Wisdom. You can find it on Spotify or, as Melissa said, on our website at www.pearlplan.com.
Okay, have a great day, and thank you so much for joining us.
Thanks, everyone.